Whether you're new to investing in the stock market or you've been in the investments for a while, there's no doubt you must have heard of the name Warren Buffett, also known as the Oracle of Omaha. Considered the world's richest man a few years ago, Warren Buffett is arguably the most successful investor alive, with the ability to turn a dollar into millions, even in economic downturns and uncertain times, like the one we've been experiencing since the start of COVID lockdowns and restrictions, and now Russia's invasion of Ukraine. As you may have guessed, he doesn't just invest in a company because the news suggests it's the best thing. In fact, Warren Buffett has some solid laid-down rules and principles he follows when making investment decisions, and you may have guessed those rules work. I mean, they made him a billionaire and one of the richest people in the world. And in today's video, we're going to be sharing with you the top 7 of those rules, so you can also use them when making your next investment decisions. But first, make sure to subscribe to our channel if you haven't, and turn on your notification bell to avoid missing new content. Done? Let's get started. Number 1. Intelligence and integrity are key. The first rule we need is intelligence or initiative coupled with integrity. According to Buffett, these lay the best foundation for a business to thrive, and as an investor, you should make sure these traits are present in the management team of the company you've been looking to invest in. To drive his point home, Warren Buffett emphasized that these two qualities are the first things he looks for when hiring new management for any of his companies. He said, quote, "If you're going to hire management that doesn't have integrity, you don't want them energetic and smart. You'd prefer it if they were lazy and stupid because having someone without integrity would do you and your business no good." End quote. If this rule is unnegotiable for Buffett, then it should be for you as well. Number 2. Focus on facts, not emotions. Buffett's second rule of investment is to pay attention to the facts and not your emotions. Warren Buffett explains the mistake many investors make. They get extremely excited and full of hope during bull markets, and then they look back and think, "I made a lot of cash last year, and I'm sure I'm going to make even more this year." It happens again. When they look back and see lots of money being made in the previous years, they push and just keep pushing. But when they look back and realize that there hasn't been any money making in the previous year, they give up. Going into investments, you should make sure your emotions do not get the better of you. If you have a good investment strategy, continue with it, and if you don't, get a better one. But whatever you do, don't let your emotions be the determining factor you use to decide what to invest in and how much to invest. Focus only on the facts. Number 3. Buy good businesses, not cigar butts. What this Buffett's third rule of investment means is to buy stocks of wonderful businesses instead of businesses that are already in their prime and now have little to nothing to offer. He explained how he made this mistake for years by going around buying cigar butts of stocks. Mr. Buffett explained the cigar butt approach to buying stocks as walking down the street and searching for cigar butts, and finally finding this awful, filthy-looking and soggy cigarette with just one puff left in it. So then you pick up the cigar, get your one puff, and dispose of it. Then you go around looking for another soggy cigar butt because it's cheap. Understand that this method might get you some money, but it would not get you big money. It's much better to invest in good business that will get you good money. In Mr. Buffett's words, quote, "I would rather buy a wonderful business at a fair price than a fair business at a wonderful price." End quote. Number 4. Only buy stocks of businesses that you understand. This rule is self-explanatory, but it goes without saying that it implies that you should only invest in what you understand. It is ideal, as old-fashioned as it may sound. However, note that the term understand here does not translate to understanding what the business is or the function of the product or anything like that. It connotes understanding the economics of the business and what the business is likely to look like a decade or two from now. Mr. Buffett used the Wrigley chewing gum as an example. saying that he knows the economics of the business and how it will look 10 years from now. In his words, quote, "The internet isn't going to change the way people chew gum. It isn't going to change which gum they chew," end quote. He went on to say that he might not know what the numbers are going to look like, but he's sure he will not be way off. He also added that evaluating Wrigley is within his circle of competence, so he understands the economics of it and the competition in the business. Number 5. Grab the opportunity. Well, Warren Buffett's 5th rule is to ensure you seize all the opportunities that come your way. One of the biggest regrets you could have in investment or business as a whole is not grabbing the opportunity to buy the stocks of the businesses you know are in your circle of competence. The businesses you understand, the businesses you have an inclination with, are going to do well based on what you find in your research about them. Mr. Buffett said, quote, "The biggest mistakes I've made by far are those of omission and not commission. I mean, it's the things I knew enough to do, they were within my circle of competence, and I was sucking my thumb. Those are the ones that hurt," end quote. He added that his inability to take these opportunities wouldn't show up anywhere. However, he's pretty sure that he's cost his company billions of dollars for sitting still and doing nothing. Mr. Buffett also explained that he made this mistake about 20 years ago when he could have bought a company in his circle of competence, but he blew the chance. In life, there are big opportunities that you have to grab, and when you have the chance to do something, you have to do it right, and you have to do it big, because doing it small is making the same mistake as not doing it at all. So, it's better not to be lazy in looking for new opportunities or be indecisive when you spot any good one. Number 6. Don't sell due to price fluctuations. Buffett's 6th rule of investments is to avoid selling due to price fluctuations. Well, as you may have guessed, what this simply means is not to sell your company or stocks when there is a lucky jump in the value of the company or stock. When asked about this rule in an interview, Warren Buffett reiterated this point by saying, quote, "In terms of our wholly owned businesses, we're not going to sell no matter how much anybody offers us for. I mean, if somebody offers us 3 times what something is worth, whatever it may be, we're not going to sell it," end quote. This may sound like unreasonable advice to some because, I mean, it's tempting to want to sell off stock for a 300% gain, especially when you're unsure of what the market or the value of the stock will be like a year after. However, according to Mr. Buffett, doing that may be one of the most regrettable decisions an investor can make when the position of the company and stock value becomes clearer in 10 years. According to Mr. Buffett, your inclination should not be to sell unless you get discouraged by the management or the economics of the business changes in a huge way. Which brings us to the last rule. Number 7. Buy stocks lower than they are worth. The final rule is to ensure you buy stocks lower than they are worth. There's a popular saying amongst real estate investors that goes like this: make money when you buy. It simply means you should buy a property at a lower price than its current or future value. And the same thing applies when you're buying stocks or making any kind of investments for that matter. This is what Warren Buffett means when he said investors should always make sure they find the intrinsic value of a stock or company before making an investment. And about finding intrinsic value, when Mr. Buffett was asked in an interview about how to find that, he said, quote, "Well, intrinsic value is what is the number that if you were all-knowing about the future, you could predict all the cash that a business would give you between now and Judgment Day, discounted at the proper discount rate. That number is what the intrinsic value of the business is," end quote. For example, If you choose to buy the Coca-Cola company today, and the company is probably selling for about $110 billion or $115 billion in the market, it sure seems like a lot of money, but the main question would be, compared to what you'll be able to get from Coca-Cola in the next 200 or 300 years in terms of revenue, profit, and door of opportunities and possibilities the solid brand name can create, will it be a great investment? If the answer is yes, then you've made a good investment decision because, at the end of the day, investment is all about putting your money down on something to get more money out later. The only question you need to ask yourself is, how much are you going to get? When are you going to get it? And how sure are you? When you're looking to buy a business, whether you're buying just a little part of it or you're buying the whole business, it's important to look at it and think about what will come out of it, and if you'd be able to use the money you earned to earn higher returns, thereby increasing the value of the business. If you can't answer these questions, then you shouldn't buy the stock or the business. With these 7 rules, it's impossible to go wrong with investing. Straight from the Oracle of Omaha himself, Warren Buffett. Wouldn't you like to be a successful investor like him? What do you think about Warren Buffett's rules of investment? Would you make use of them? Let us know what you think in the comments section below. And if you enjoyed the video, please hit the like button. Don't forget to subscribe and hit the bell icon to be notified whenever we post new content. Thanks for watching, and see you next time.